All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, and I'm definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor, drop me a one in the chat, and we can go ahead and get this session on its way this morning. All right. So each and every morning, as always, we want to make sure that we live by the Forex trade room credo, and that is that we take massive action, making sure that we are accepting all possible losses before entering a trade, preparing you for any outcome. We want to make sure that we center ourselves in body, mind, and spirit, assuring a balanced approach to trading. Let's always continue to trust in our education, strategy, trading skills, and intuition. We always want to imagine our trade successfully materializing, and we want to be sure that we are obeying our trade strategy, avoiding decisions based on greed or fear. And we want to make sure that we're never looking back or stopping once our trade has commenced. All right, so let's get right to it this morning. Going over to trading economics, we'll take a look at the US dollar first, right? So the US dollar index fell around 97 to around 97.3 on Thursday, marking its second consecutive day of losses as investors pivoted towards riskier assets amid a broad rally in stocks and commodities. The greenback also came under pressure from a sharp drop in Treasury yields, driven by strong demand in Wednesday's 10-year note auction. On the policy front, minutes from the Federal Reserve's latest meeting revealed that most officials were open to cutting interest rates later this year. Despite the overall decline, the dollar surged more than 2% against the Brazilian real after President Donald Trump announced a 50% tariff on Brazilian imports, citing an unfair trade relationship. This how it starts every time, right? Trump also issued tariff notices to eight other countries, namely Philippines, Brunei, Moldova, Algeria, Iraq, Libya, Sri Lanka, with duties ranging from 25 to 30% effective August 1. So the deadline has moved again, right? I think it was supposed to be July 9th, if I'm not mistaken, which was yesterday. Markets now turn their attention um, to potential trade agreements with India and the European Union. So the drama continues. We move over back to the front page, and we see as a result, copper prices rise as U.S. tariffs set to begin on August 1st. All right. So copper futures in the U.S. climbed to around $5.60 per pound on Thursday, hovering near all-time highs as U.S. President Trump confirmed that a 50% tariff on copper imports would take effect on August 1st. The U.S. imports almost half of the copper it consumes, with the majority uh, sourced from Chile. Right. So copper making a huge move, right? We know this game now, right? And how it goes. So of course, right, it started to move long amid fears of a 50% tariff. European stocks rise for a fourth straight session. Um, Gold extends its gains, right? So gold rose to around 33.20 per ounce on Thursday, extended gains from the previous session, supported by a weaker dollar as investors continue to monitor trade developments and digested the latest FOMC minutes. Markets remain focused on a wave of tariff demand letters from President Trump, with Brazil the latest to face steep duties. Um, Earlier threats on copper, right, and other countries, fueling concerns over broader trade disruptions. So here again, Fed meeting minutes in June show that officials were divided among the timing and extent of potential interest rate cuts. Right, so we've got a split there. While most anticipated some easing later this year, views range from backing a reduction as early as July to favoring no cuts at all by the end of the year. The Fed maintained a cautious, data-driven stance amid mixed economic signals, including tariff-related inflation risk, slowing consumer spending, and a strong labor market. Right, so we've got a split, right? So we'll see. This is because, right? So at the same time, uh, that the president wants to see interest rate cuts, he continues to play the tariff game, right? So that puts the FOMC in a very, very tough position. And we can see that there's a divide in regards to when and by how much, right, for these rate cuts. Okay. So just keep in mind that, it was I guess I could say wildly expected, right? Everybody was expecting cuts to come in, possibly that first cut in July, possibly. But we'll see. We'll see. We'll see what happens there. As we're looking at 50% tariffs, come come August 1st, right? So we'll see, right? To keep moving the goalpost, right? Moving over to the calendar today, right? Which is the 10th. We can see at 8:30, the big news today is we got unemployment claims. We got some FOMC members speaking. What is that, 3 today? So this will be something to look out for, see what they have to say, being that looking at the meeting minutes, there was a split. So it'll be interesting to see what they all have to say. Um, and that is pretty much it for Thursday. Not a crazy busy day on a Thursday. We move over to CNBC. We can see here that stock future slip after Trump says 50% tariff on copper imports to start August 1st. So we will see what happens once this is pre-market. We'll see what happens once New York opens today. More copper talk, right? So we see what's still in all the headlines. Is the situation with the tariffs again, right? Um, Nvidia, right? They hit major milestone. This was it four? What was the cap? Four something. I saw on Nvidia. That was for Pro to Free Trial. That was news. Oh, the market cap. But this might be another private story. But it was like, yeah, there it is. On Wednesday, the artificial intelligence powerhouse became the first company to amass 4 trillion in market cap during trading. So the fact is neither Microsoft nor Apple can claim that they're currently creating a new industrial revolution like Nvidia can. Said Jim Cramer. In fairness, they did create the last industrial revolution, the rise of the personal computer, although that was a long time ago, right? So we talk about NVIDIA all the time in this group. This is one, hey, for your personal portfolio. It's to me it's a keeper. It's a keeper, right? And there's a couple other stocks related to this space that are starting to take off. There's one that hopefully I can get to it today. We could cover it tomorrow. Hopefully we could cover it tomorrow. So another one that's pretty hot right now, right? That you might want to grab a hold of. So that is the fundamentals right now. Any questions regarding the fundamentals?
Hey, I kind of came in late. Was there any update on Canada news?
Canadian news. I didn't have anything, but we could take a look at see Bloomberg. Everything is being overran by the tariff situation right now. Again. Um
Only
at
reason why I
TSMC.
asked, my chart was open
Mhm.
to UCAD, and it looked like it's trying to recover. So that's why I was asking.
Yeah, let's see. Let's see what you talking about to the upside.
Yep.
Yeah, yeah, that's a 80/20, right? On that UCAD. I'll take a look at it here in a second, but let me see. See what's going on with see if there's anything with Canada. It weakened, right? Backing off of 8 month highs as the greenback recovered from 3 year lows. Investors digested the latest round of reciprocal tariffs. Uh, would have been a July 9th deadline for tariff reinstatements on up to 70% of imports has now been pushed, giving negotiators more time, right? So I guess it's following along with that deadline being moved. Um, Prolong the cloud of potential duties on Canadian-made aluminum, lumber, and other key exports. Statistics, Canada's June data show private sector activity contracting for the seventh consecutive month, and the merchandise trade gap widening, reinforcing the narrative of lopsided growth that could prompt the Bank of Canada to adopt a more dovish stance, right? So, it's been weak on the CAD, but this is a reaction from the dollar and the tariffs being moved. We see the DXY, um, still down for the most part, but seeing a little pullback with some pairs. So that's probably what you may be seeing with the CAD. But for the most part, we saw right price moving down. We're moving towards that 95.55 daily D extension there. Let's start out take a look at that UCAD play. Um, we got going on, right? So we know that we've got it in a few areas, I believe, right? Where it's trying to push off the low. I've got that 80/20 on the daily where we pretty much double bottomed a bit there, right? And it's starting to push up daily stochastic. It's in the buy zone. So like I said, it's still fairly bearish on the CAD for the most part, dollar too. But you can see here where even though we've got a weak dollar, Canadian dollar is fairly weak, we got an 80/20 that still played out to the upside there. All right. So we actually came in the target too on this 1 hour chart. And then if we look at our four, right, still have that larger 80/20 looking to play out. So that's what you're seeing there is that slight push. This one may take a while, but we will see joy, right? We know that it came in as a major low, especially from that higher time frame. So we'll see if it can maintain its momentum and now pushes to that 4 hour 80/20. All right, so we'll see. We'll see what happens with dollar strength. See if we get some type of pullback uh, on dollar strength. Any questions on that?
No, it's just that the reason why I asked because I was looking at the cloud. The lag is not broken out yet, but it's basically like you said, waiting on the pullback. It should break through.
Yeah, yeah. So we'll see. And you say the cloud. What time frame is that? What time frame?
4 hour.
Oh, not 4 hour.
Mm-hmm.
Let's put that on. See where we are. Yeah, it's taking a while, but oh, it's getting there. Like you said, it's getting there. That's a decent play. That's a decent play. That one might move up and hit that target for sure. So that's where we are on a dollar CAD. So we'll stick with the first we'll take a look at since copper is top of mind for sure. We'll take a look at the commodities. And we have been looking at that copper, right? And so the 4 hour on copper, right? Trend line break that we drew up a long time ago, right? Played out and copper is moving. Is moving higher, right? So this is the 4 hour chart here. We got about 382 pullback, but it's kind of moving sideways now. But bullish on copper, right? See if it'll turn over and give us a lower price, right? Before we have at it again. But we've hit it quite a few waves here on copper. So right now, copper long, right? Let's go up to we'll take a look at it on the daily. to see where we are from a larger picture, right? For sure. So we just hit, take these other ones off from the lower time frame. So we just hit an extension on a daily. Just hit an extension. All right. Moved my high. Must have moved it down a bit. An accident. But this was your high. And we've now pushed beyond that. So we're looking for any type of pullbacks or continuation, no matter what type of time frame you're on. Um, with those tariffs being priced in already, the market is already reacting, right? And, so we're looking at 50% come August 1. We'll see if that holds up. But the market is definitely reacting to the possibility. So that's where we are. On copper, take a look at the rest of these dollar pairs. You got that dollar pushing lower. So just back and forth, right? This is the forever 80-20 that can't make up his mind on the 4, right? Bouncing back and forth, right? We started to get some good momentum down, but look, it's completely U-turn down. That should be there on this 80-20, right? That stop, but this has completely U-turned and going back. So we'll see if it U-turns and pushes through these highs, or if it's going to keep ranging. So we started to get that momentum. Didn't quite get there on the Aussie dollar. Um, so we'll see. A lot of back and forth. It's got some good momentum going to the upside right now. 1 hour feel. I've been pretty much watching it from the. I don't. I've been pretty much watching it from the 4 hour chart, but we can see what's going on here on the 1. All right, so we got deep retracement, so that may be ready to go and hit that extension on the 1 hour, however you're playing it. But that 4 hour 80-20 play has been going back and forth for so long now. But this is pretty clean here. I haven't even tracked it from the 1. I don't know if anybody's been watching it from the 1 hour, but that's uh that's a 786 retracement, so that's a 127 extension. If it could push past those highs, it's probably where it's gonna go. All right. That still doesn't stop you out on that 80-20 on the 4, but we actually complete this. It's been a little bit all over the place. So there we are. There on the Aussie dollar, moving down, we'll take a look at this euro dollar play. All right. So here's that daily target that we're looking for, that 119.30. I think we will get there, right? Our daily stochastic is moving back into the buy zone and it's only been moving sideways, right? So not a lot of momentum to the downside. So I look for that to finish. If we come down to uh take a look at this 1 hour play, it's just been moving sideways as of late, but got a little momentum to break the outer trend line there. So we're looking for that to continue bullish, right? So that 1 hour play will take us to 118 33, and I'll bring down this 119.30 level there, right? So this is our daily 1.618 extension. Yeah, extension there. So that's where we are, right? That's where we are. So still bullish, right? And we could see some pullback in that dollar, but for the most part, it's down, moving to the pound dollar. Right. So we know a while ago we came into that daily D extension. Now we're at a reset, right? Stochastics in the buy zone. So this is all going to be based on what that dollar wants to do. If we see a short-term pullback, then we'll see it move down. But we'll see what if anything can create dollar strength at this point. We are sitting at some lows, right? We know we're chasing that daily extension on the DXY, but we'll see. We'll see what President Trump and his administration has up their sleeve in regards to dollar strength, or continued dollar weakness in the short term. So this is where we are. The extension hit daily chart resetting, and we are seeing a slight correction. So watching it on this 4 hour, we can see that it's moving down, right? So and maybe we can get it to come down to this 134 level, this daily level, and then maybe it's time for it to get back long again, this pound dollar, right? If we see continued dollar weakness. So this is a future play that we definitely want to be paying attention to uh, for the long term swing, right? For the long term swing to the downside. So we'll see if we can get it to move lower. That's what I'm hoping. That's what I'm hoping on the pound dollar. Um, Moving down to the NZD USD, right? This is one too that we were sitting, right? But we never got that full retracement back to TP1, and it's just still kind of just ranging, right? So this one is not as you don't see as large of a reaction as you see on that Aussie dollar to the upside, but it's still just kind of dancing around doing nothing, right? So not my favorite pairs to trade right now, that Aussie dollar and that New Zealand US dollar, but this is where we are just to take a look at it. Still in that zone, moving back and forth. This has been a mess, right? For the most part. They're moving down to, we looked at the dollar cash. Take a look at this dollar Swiss short play. Uh, and still so far so good, right? Moving lower, continuing to move lower. We take a look at this 4 hour chart, right? Look how far we've gone, right? We've moved way south after that trend line break. So we're still looking at that target at 77.45. Like I said, we may, because the dollar's been selling off for quite some time, we may see a temporary reaction to the upside before we hit this de-extension, but we shall see, right? But this is where we are on this dollar. Swiss, anybody short? Did anybody play this short? Right? We know the dollar's been down for the most part all year. This has been a good play. Nope. All right. So that's where we are. Moving to the downside. What did I have here on this 1 hour? This was so we had going on here, right? So that previous extension hit, right? 80-20 played out, pulled back almost to a TP2, and we're in an 80-20 zone here, right? Just moving sideways, right? So just moving sideways there, right? Wonder if we'll break higher from there or if we'll actually come down, right, to that 127 and kind of then start to make that move to that 382. We'll see. See. So that's a 80-20 in the 1 hour for the dollar Swiss. The dollar yen, right? This one I kind of haven't had my eyes on at all. It's kind of just been bouncing all over the place. So I haven't done a recent markup because I haven't been playing it too much. Um, right? So we took off from there. Did we get an 80-20 or anything? Really hasn't been um a whole lot with this dollar yen. Yep. So there's an 80-20 there coming off the high. I'm not sure if anybody caught or played that one, but that one's probably gonna turn over, right, and come to TP1. So completely missed that opportunity, right? Wish I would have been looking at this chart because it took out our A, and we know when we flip it, oftentimes we'll see that, at some point. So that's where we are on the dollar yen, looking like we're trying to turn over and come down to TP1 there, right? So that's another 80-20. I have to mark that up just for the record, right? And that's moving down. Uh, Reese, you said we just got a trend line break on the 30. Was that on this gold that you're talking about, or was that something else? Oh, on the pound. All right, my bad. I didn't have my chat up. Um, let's go back to the pound dollar. All right, we'll add a chart. We'll put that 30-minute on. You plan that short to the downside on the pound dollar? One more fib to the downside? Yeah. Oh yeah. Short. Nice work. Put you some sevens in the chat on that. See if that continues to turn over. Yep. Nice work. And we didn't quite get were we pretty much on it? What's that? 136.20? What was the high on this candle? 136.20.01. Just shy. So just shy of it. So still, right, moving down to this target here. Boom. All right. So you just missed it? Oh, that's 786. Yep. Yep. It did. It did. So we got that 1.618, which is right in line with that capital fib. Yeah, so let's see how that plays out. That's a nice setup on that sub fib. See if it continues its way down. See what happens when the market opens. See how the market reacts. So that's where we are there. And then you said 30-minute and a 1 hour 80-20 sell on gold. So let's take a look at it, right? Since gold's been climbing again. All right. Let's crown off. Down. Down to the 1 hour first. Nice work. Nice work. Great work on that. All right, so this is where we sit. We'll see what happens there. So I'm going to take this low. We'll put it down. We'll pull it down to the 30. Mhm. So let's see what happens. See if we can get that to break down. Great work. Appreciate the heads up on those. Mm-hmm. So that's where we are, right? So since we're sitting in these commodities, take a look at this oil play, right, that we've been on. So it's slowly, right? It slowly came off the lows. So if you took it off the lows, right, where we all as a team identified it, right? Sitting at the lows just above the cloud, kind of moving sideways. We got a bit of a breakout there. We've got a bullish cloud ahead now. As stochastic is back in the sell zone, right? But we'll see it. We'll see if it just continues to move sideways and then we break out again. But we're right below that 200 moving average, right? So if we get above that, then we could be running towards that 72.19 weekly level on oil. So let's continue to see uh, what's going on. As a matter of fact, we'll go over to commodities. Check out crude. Fell below 68 a barrel on Thursday, weighed by growing concerns over broader trade disruptions that could dampen oil demand. So it's the same old story, right? So when you go over it every single day, right, and you start to see the patterns, right, and how when one event comes back around, how it impacts, right, something else, either negatively or positively. But you definitely start to see the pattern. You kind of start to know what's going to be impacted as a result of whatever the type of news is that comes through, right? So the news wire. So the market remains focused on a series of tariff demand letters, right? So again, um, adding to the pressure, the EIA reported 7.1 million barrel build in crude stocks last week, defined expectations of 2.1 million barrel draw. However, distillate and gasoline inventories declined, with the latter indicating strong demand. Losses were also partly cushioned by renewed attacks in the Red Sea, which disrupted a key global shipping lane. Meanwhile, OPEC Plus is set for another major output increase in September as 8 members unwind voluntary cuts and the UAE transitions to a higher quota. Despite the additional supply, the UAE noted that inventories are not building, pointing to continued strong demand, right? So this part in the middle here is exactly why you see, right, things kind of moving sideways. Demand for refined products and geopolitical tension prevent a full collapse. You're on it, Joy. Right. So we probably will see that. We'll probably see, at least in the short term, that push a bit higher. But this is one that was hard to lay off of, right? When you had it kind of sitting and hovering at that weekly level, is just above the cloud. You kind of thought in your mind that at some point it could break out to the upside. So that's been a good play despite the sideways movement lately. Silver, right? Kind of just hovering in that 80-20 zone, right? Which way is it gonna break out? Not a whole lot there. Net gas, right? 1 hour. Okay. That was our pattern that we drew up a while ago. Right? Came through, right? Came through. Right? So even with, our harmonic pattern, look at it, right? So here's your correction, that we had drawn up. But look at how this is still, right? Look at how this is still an ABCD wave, right? Look, right? So all of this stuff, right, is just additional confirmation within the Fib principles, within that structure, right? Still an ABCD wave, no matter how you draw it up. Can't get away from it. Right. So that's where it is on that gas. Then we talked about copper. We talked about gold, possible correction there coming. So we'll see. Let's move over, take a look at these indices. As I am still holding these S&P trades, hoping to get to 6,500 is my target. Let me clean this up a little bit. Just look at it from the daily. Right. So I am hoping, right? We didn't see that correction back down to that level. I am hoping that we just continue to, because this is another high here. I'm hoping that we just continue to break above because I'm holding three S&P positions now. Um, on my one Darwin, I am holding. Let me see where they are right now. 'Cause I got one Darwin account where I'm just holding positions long. Uh-oh. Sorry about that. Give me 1 second. Let me see if I can 'cause I didn't take a look at it yesterday. Let me see if I can possibly pull it up and log into the one. See, see where we are. Hold on. Let me reshare, see if I can make it big enough on this one account. Um, 'Cause I've been holding these for a while. I'm getting, I'm taking a hit in swap right now, but I'm hoping if we go to 6,500, it catches up. So you can see, Walmart is down. I'm holding that for the long term. Or that is correct. So right here, um, in my three spot positions, one's up 24.81, 46.15, and then the one is almost up 7,000 at 69.83. The QQQ is up. So this is the account where I just held them like all the way through the mess. My TLT is down, but like the TLT, you're getting paid dividends on. My small Visa position on this one, because I added to this one late on this account, is up 316. So the one that's down the largest right now is my TLT, which that's cool. I hold that as kind of a defense. So that one flows back and forth, but then that Walmart one is down 628. But and then I got some other ones that's slightly down. Like I had closed out and added back to this girl JP, this pound, like the pound yen, euro Aussie. I closed out and then got back in. So that's gonna take a while to move. Then I got some other ones that's slightly down there, some stocks, but the ETFs are doing good, EEM and EFA. So this account is doing pretty good. I'm looking forward to continuing. These aren't super large positions either. These are positions that have just been holding. So 11,000. I got some swap that I'm getting hit on for almost like high twos, almost 3 grand right now. So it's scattered at. You can see the totals are higher than that 11, almost 12,000, but that's because I got swapped and stuff like that for holding these positions so long. But it's all good. The Nvidia play is up on this one account is up, and that's just at 106 shares. So this one is up over 1,000. And I didn't on this account, I didn't take this one early either. Like this is late in the game in Nvidia for Nvidia. Um, so yeah, so that one's this one account is doing pretty good. So that's where we are there. Let me I guess get back to our charts. Hold on 1 second. Um, Close this out, bring this one back up. Um, Hold on 1 second. Share there. So that one, so that account there was one that's just been for a while. Like that one I held on that Dawn account through the correction and everything. So um I'm hoping that the trend continues with the S&P for it to be strong in July. Like I know one major investor I was reading, uh was it last week? I think it was last week. And they were saying that they see another 12% at least correction in the S&P. I'm hoping that doesn't occur until we get up and we hit that 6,500 level, hit that D extension. Um, because I really don't want to hold through another another correction. Any questions on the S&P? No? Okay. So looking at this US 30, this is the 1 hour. Oh, it's all good, Yasina. It's all good. Appreciate you being here. Appreciate you being here. Right. So this US 30 on the one, right? We've been kind of toying around with the idea of this 80/20, right? Being in the zone. Um, so we'll see. I don't know. Eh, it has to be some major news. They seem to be trading right through all of the Trump tariff stuff for the most part. Uh, so we'll see if there's any new developments that could force things into a short-term correction with these indices. But right now, right, we are in the 80/20 zone on this US 30. Right. So we'll see what happens there. Right. Not really looking to buy because it's in that zone on the one. But we'll see if we get any type of further correction. I mean, I don't know. These markets have been running pretty hot. Fundamentals rule the day, right? Here's the NASDAQ moving, right? It's pushed beyond that 80/20 zone. Like this is what I'm talking about. Like we're not really seeing it. The market is just continuing to run right now. This is the daily chart, right? So we push beyond a daily 80/20 right now, push beyond the highs, and we're just running. Um I appreciate it, Yasina. It's cool. We just went through some dollar pairs this morning. Talked about um, the new tariff situation with Trump, mainly like with copper, 50% supposed to hit August 1st. So copper is running long right now, which is something we've been tracking copper. But other than that, right, you didn't really miss much. A lot of these trades are just trades that have been running, right? The dollar is still for the most part to the downside. It's the dollar's at a fairly low price now. Um, at a fairly low price now. But so we're wondering if we're going to see any type of short-term correction in the dollar to the upside. I'm wondering what could be the catalyst to make that happen. But the dollar is still bearish, so everything is still kind of revolving around the U.S. dollar being bearish right now. But of course, it's recorded though too, so you'd be able to watch it on the replay. I've already in the replay section I already posted the link for this session. So 80/20 buy on a that just hit the 61.8. Oh yeah, on the 15 minute. Okay, so let's go back and take a look at that. Let's take it down to the 15 on the S&P. And this see if we can go and find that play. Oh, yeah, so this is that was an 80/20 there. I still got that. This one's still marked up sessions ago. Right? So we got a U-turn. We got a U-turn here on the 15 minute. Oh, from the top, like here, like that. 61.8. Think we're gonna turn over. Keep moving. We'll see. That's a possible play, right? So right, if you're thinking, hey, we may push lower, you've got right? The easiest thing to do, you know how I go, Reese. Put that trend line, put that that trend line break in there. That was an 80/20 too, because it didn't quite reach that 382. See if we break back below it. Appreciate it. Get reach some sevens all day, all types of plays, right? in these markets, depending on the type of trader you are. We're just cleaning up on these time frames. So we'll see what happens there. Right. That's definitely something that could happen because of where we are on the higher time frames with the S&P, right? We may see a little bit of relief. We shall see. Appreciate you, man. Um, Here we are in this UK 100. We had that trend line drawn up a while ago to see if it was going to hold up. We were saying, hey, is it going to break below that 87.40 on the UK 100, or is it going to hold and continue higher? And it is continued higher, right? It's pushing higher. So we may not see a deep correction, right? Fundamentals rule today. We know how it goes, right? When you got strong fundamental support and continued move in either direction, these 80/20s off the top won't hold up in the momentum. But usually it happens across the board. Like you see it happening with the indices, right? With this latest run. Um, there's times where you guys remember you've been here for a while where the yens, right? The yen crosses had across the board 80/20s, but because of the fundamentals, right? Prices continued to push through, and eventually the Bank of Japan stepped in and the market corrected, right? And so, but it kept blowing straight through 80/20 opportunities. So usually if you look at all your charts, you catch the pattern and say, okay, well, 80/20s for these indices aren't necessarily giving us what we want, right? Just kind of how we spotted it with the Aussie dollar and the NZD dollar, right? It's like, man, it's just range bound. It just keeps it'll fall and then it just takes off, So maybe those aren't the best 80/20s to play, especially if you don't have the patience for it, right? Um, so maybe when you catch those patterns, you pass on those because they're all kind of doing the same thing like these are here. So when we look at the Nikkei here, where are we at now? This one kept running, took it out. Look at that. So we're trying to track sub fibs, but this is another situation, right? Where those 80/20s, again, it's another indice where it's blowing right past those zones, right? And even though it still hasn't hit the extension yet, 1.618 extension yet, it's like you start to wonder, like, it'll have to be something major for it to correct at this point, right? As it's moving sideways, kind of hovering here. This could be a potential, breakout play. The way it's just moving sideways, right? See what happens there, but that's your 1 hour chart. Um, German 30, we were playing around on the 15, and hey, it completed, right? So we had an ABCD wave, and we kind of got after it, right? To the upside. Now we got a new AB boundary. This one's not quite in the 80/20 zone yet on this German 30 on the 15. But it could get there. So keep an eye out on this one, right? Either for the pullback into your buy zone or for maybe price on this lower time frame to react. But again, right, be careful with those 80/20s on the indices right now. And then this one, right? This one has been this has been showing the love, right? The Russell 2000, right? So we projected this one to move to the upside. And it's still doing just that. So this is on the 4 hour. And I look for that to continue to push long. It'll definitely your small cap companies. It'll definitely be helped out if we do get that rate cut in July, right? At some point, if we get a rate cut sooner than later, that'll definitely help this Russell 2000, I think. So this is one to keep an eye on and see if you can catch low prices to get long. As ever since we've been tracking it, it's been definitely moving to the upside, right, on that. So, like I said, a lot of these are plays that we've just been sitting in. Um, Ever since I've gotten into uh, pivoting my trading account, now trading it more frequently than I do my my own like personal long-term investment account, right? Where I'm just accumulating and buying shares and things like that. But ever since I've kind of found the right formula, right, the right mix in regards to my approach to taking a long-term investment style approach to my like my Darwin accounts and things like that, and being able to just sit and hold the positions, uh, trading wise, I've made a lot more money, right? Just being being better with my risk, trading, right? Not taking out you know, larger risk. And sometimes that might mean like typically if I'm doing a shorter term trade, I might take out 1% or 2%. Um, but what that means is that if I'm more looking at it from a long-term investment perspective, meaning I'm gonna hold these positions, higher time frame targets, then maybe my 2% that I would usually take now becomes 1%. And that 1% trade that I'll typically take in one of those accounts now becomes a 0.5%. And now that enables me to just hold it long. So if we do get those corrections like we had in April, um, and that's mainly where I learned my lesson. Like those positions that you guys saw in that one Darwin account, um, I was able to hold and maintain those positions. But I did have some longer term, like some larger positions that I had to bail out of because and that's where I really learned the lesson, like that final lesson. I had to bail out of them because I couldn't hold because of that correction was like 15% or whatever it was with that terror situation in April. Anybody remember how deep that correction was? I think it was like 15%, right? Something like that. Something crazy. Uh that happened. Um but I wasn't able to hold them, and I had to take the hit on some of those positions because I would have got margined out. So when you look at the cumulative total, it wasn't margined out on one position; it was several, but it was as an entire group. I had to reduce positions, get out of some because that correction was too deep, right? Joe, you got your hands up. My bad.
Not a problem. Um, you just hit on something that because I've been struggling with. Even though I have exits, but then when a new fib form, I try to wait it out for the pullback. And you said a retraction of 15%. And I was reading somewhere to where it says never really let your trades go in 7% drawdown. Do you have any suggestions for that? For like
No,
percentage wide,
percentage
maximum
wise,
drawdown?
no, I try to stay within I just try to, I don't look at it as the maximum drawdown. I try to stay within that fit framework with, hey, is it going to hit my stop or not? You know
Okay.
what I mean?
Yeah.
Just that's how I just keep it plain and simple. You know what I mean? And stay away from that. What happened is that I was just because this is where it got me, right? And just not working my math right because like in a Darwin, you're only getting uh, um, like 5-to-1 leverage, right? With ETFs. You get what I'm saying? Um, yeah, I think it's 20-to-1 for stocks and 30-to-1 for currencies. So I was in a lot of ETFs, and what was crazy is uh, a lot of the ETF, like when you look at it, like they were different. I really didn't have enough defense built in. If I would have had enough defense built in or higher TLT positions, things like that, but even with TLT at that point, because of what the situation was that caused it, bond. That's I think where everybody was like messed up for that month of April because even some of your defensive, a lot of your defensive positions just weren't working because of what the situation was, the tariff situation. So everything kind of like exploded. So in my mind, I said like, oh, I thought I had bigger defensive positions in, but there really was no defense. That's what the shocker was. Besides, not having being able to have the foresight to know what the reaction was going to be and either reduce the positions at the right time, or not be in the market at all, um, or not have been leveraged the way I was leveraged. And so that made me take a hit. Now, what was crazy was is that my risk management was good to the point where, and I was up large enough to where I never went below the 100,000, right? I think it was like low as like 107 or something like that. One of my accounts, like I was able to stay above 100,000, um, but I lost some bread because of that. And a lot of the ETS, like I was in a lot of like a lot of aggressive high growth ETFs. Like I wasn't in what do they call it that I learned about later? A equal weighted like S&P. I wasn't in that, at all. And so I would have got margined out. I would have got margined out. So I had to get out of positions and reduce the positions to stay in the game. That part, once I realized that the play that I made to stay in the game was a pretty good one. But hindsight, I'm like, man, I never gonna do that again. I gotta be smarter. So you learn those lessons. But like I said, I have made a lot more money holding positions, right? Not looking at things on a daily basis, how much am I making, or a weekly basis, or even a monthly basis. It's like, yo, like maybe it takes me an entire quarter for my positions to hit the target. Uh, but I'm sleeping comfortably because my positions are calculated right now to where I can hold them and just let them do their thing. Like there's positions that I had, and like if you seen on that $1 account that I showed, like I had got out of like some pound yen positions, but I know um from a daily perspective, those haven't hit the extension yet. Like the Euro Aussie, pound yen, um there was another one I was in. I can't remember if I was in the Euro yen or not, but when I got back in those, that's $100,000 account. Like it's over 100 now. But I only took them in like because I know like there could be another correction, and I'm getting back in it. Um, I'm only in that at like $1, like one mini lot. Like now, if that runs like some of those, if they run and hit the target on one pair, maybe the pound yen or something like that, it could be like that one mini lot over time will be like close to $1,000 or something on one of those pairs. So I can sleep easy letting that dollar just that one mini lot, that $1 just run and let it over time just go hit the target, right? And so once I took that mindset and brought it down into my trading, my trading accounts. Like I said, I've just made a lot more money over time. So, but it just depends on your style as a trader and what you can handle mentally. But I know if an account that's over 100,000 now, and I got you know I'm good, right? I'm plus 11,000 something right now. Uh, that's active. I can sit on a pound yen at $1 forever. You know what I mean? So,
No,
so
because I
I'll
mean,
I'll take that.
basically what you
Go ahead. I'm
described
sorry.
is what I'm going through with Euro Aussie. I had got in for the low. And I was like, you know what, I'm
Hmm.
gonna be good this time and just play the 80/20. Because I was thinking, because in that session it was basically, long term long. So I'm like, nah, I'll just go ahead and play this 80/20. And then when I came back and he was like, Joy, you still in? It's like, nah, I went ahead and let it close. So I jumped back in. I was like, let's just buy something. And, you know, and so I jumped back in. Now, don't get me wrong, I'm in a good position, but it's like when I'm looking at Euro Aussie, I'm like, do I have the strength to stay in it? Then I thought about if I could sit up here and have the strength to stay in all these I could, a lot of the oil plays that kind of draw down
Hmm.
on me. And that was my fault because I had got cocky and moved my stop loss. And
Yep.
and if I wouldn't have moved my stop loss, I didn't lose major, but it hurt my ego. But I'm to
Right.
the place, I don't know if you could say that I'm better than what I was when I first started with holding these positions, because no, it's not easy. I still get the butterflies, and I just treat everything like it's Euro GBP and just close the chart and then come back. But
Hmm.
that's what I'm looking at with Euro Aussie, because it's like I can't fret that I closed that 80/20 and it could have been 1,500 by now. Oh well, I made money and I jumped back in.
Yeah, 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 absolutely, absolutely. That's it, man. And that's that fear and that greed, right? And that fear of missing out and all that stuff that they talk about. And that's why, like with me, I'm like, I can't let the greed like get to me. Like, hey, one mini lot on that account, on that large account, like let that trade run. Now I'm looking at the daily D extension, right? Like, okay, this one mini lot may pull back 200, 300 pips, like say it's a pound yen and the daily D extension is, 1100 pips away. Well, my 4 hour, I've got an 80/20, that can drop 200, 300 pips to the 382 or whatever. But I'm like, I'm focusing on this daily chart. I'm trying to get to this daily D extension. And because I'm not over leveraged, I'm just gonna let this accumulate. Now, if I can get that pound yen, that euro Aussie, you know, all to move to those daily D extensions, and I'm in those at 1 mini lot a piece, I'm not stressing my account. Fundamentally right, it moves the way I needed to move and hits the target. That could be over 3 grand between, the three of them, potentially once it hits the target. Now, that may be uh 30 days from now, it may be 4 months from now, but it's not tying my account up. It's not stressing me out, causing me to lose sleep, you know while it does whatever it needs to do to get to that target. It's gonna have some good days where it makes some runs. It's gonna have a certain amount of days during the month where it's correcting, and that's just what it is, and that's where I'm in now. Like I say, like it's just been a better overall experience. So that's just my own personal experience and my continued journey, because I'm like, in my long-term personal investments account, like my own personal investment accounts, your 401ks that you may have attached to your job, your place of work, we let those run. We let we let those run for 40 years. Some of those accounts. And so it's just like just exercising a little patience and adopting, and like I say, I will be more active adding or reducing trades, in that trading account, because that's what it is, a trading account. But at the same time, I'm not going to be rushing to be in and out every day and every week either. And that's just me personally, right? Because we got plenty of people in this group that trade lower time frames, and they do their thing. They're accumulating, pips and points, on a regular basis. But that's just not my thing. And plus, my lifestyle doesn't enable me to do that anyway, for the most part. So yeah, it's good conversation to have, because I know a lot of people go through it and you're trying to figure it out, what's best for you. And it's a continued evolution, right? It's just continued growth, you know. And so that's it. Any questions over anything that we covered today? No.
Nope.
And so that's like on the S&P, like my target is right, and that's what's kept me in those positions. I'm like, hey man, I need that 6,500. That's my target. I'm looking for that 6,500. And so I've held those three S&P positions, and it's paid off. I know 75% of the time this market is meant to go up, right? Especially when it comes to the S&P. Uh, so it's like I'm just gonna hold it, see if we can get the breakout. Like if it makes another correction, then it's just gonna make another correction. Like I'm positioned, where with my risk is because I learned that lesson that if it was to make, I hope it doesn't, but if it was to make another 12% correction now, then I've got enough room to where I'll just be looking for another low price to add to the positions that I have at this point. Uh, but it's looking pretty good right now with the S&P in those positions. So hopefully we get above this 62.88 and we keep running. And then I will happily take profit then. But I've been in those for a while. So that is it. We don't have any other questions. Everybody, enjoy the rest of your day. Good conversation. We'll be back here tomorrow, 6:30 a.m. Eastern Standard Time for the pre-New York session. Bye for now.